Basil Read has plummeted to a full-year headline loss per share of 131 cents. That's versus a profit of 139 cents previously. Marius Heyns, who's the CEO at Basil Read, joins us now for more detail on these numbers. Marius, thanks so much for joining us today. At the top of the show, I said, I wanted to ask you to what extent these numbers leave you feeling a little bit jaded about where you're at the moment, because looking at your operating context, you're feeling the lagged effect of what's happening on the global scale on an economic, from an economic perspective, and that's exacerbated by the very slow rollout we're seeing of announced infrastructural projects right here in South Africa as well.
Alicia, thanks for having us. First of all, the number does look horrific, but it's very isolated, and it's also due to some non-recurring items that we're writing off once off in this financial year. And it's not all doom and gloom. The order book is still in excess of 10 billion. There is definitely a slower rollout than what we expected, but there's some nice projects that we're currently working on and submitting bids. Some we've already submitted. There is projects currently that we're negotiating in the pipeline, and looking forward, it's certainly it's not all negative.
Marius, I sort of agree with Alicia in her comment about you feeling fairly jaded about things and almost despondent, but I'm glad to see you've put a positive spin on things. But it almost seems to me that over the period under review, you've sort of said to yourself, well, okay, we've got tough conditions, let's do something about making the company leaner, meaner and more ready for when the good times return, i.e. clean up the balance sheet, get rid of things that we don't really want, get rid of financial assets or instruments that are saleable. Is that a fair assessment of what's happened?
Very much so, Lindsay. If you, especially, we've given an indication of the balance sheet after the TWP deal, and certainly you can see the balance sheet is improved quite dramatically. The company is in good shape. As of this morning, cash in the bank is 1.8 billion. So exactly what you've said. Yes, we are a little bit punch drunk from the economy and trying to come back at the market. Unfortunately, we had two projects that really hit us badly, two roads projects, and then we've had those non-occurring write-downs, and we've indicated them 60 million is due to the IFRS charge for the BE transaction. Unfortunately, those is part of doing business in South Africa. We're very proud that we've been able to get a commitment from SIOC, Sishen Iron Ore Community, which is non-political, it's community-based, and the chairman, Connie Malusi, is now on our board as well. So to have a quality BE partner like that, so unfortunately that IFRS tax that is raised comes straight off your headline earnings. Yeah. And similarly, we've decided now it's prudent to make a learned calculation in terms of what we can understand from the Competition Commission, and we've raised a total of 75 million rand as well. We thought it prudent to write down some of our properties to get them in line with the valuations currently in the market, and so all those created an additional 200 million of write-downs.
Yeah. So while all of this work is being done and was looking at you coming to the fore with a cleaner and meaner operation to progress forward, the focus now shifts to the core business. So let's take a look at project execution specifically. What kind of projects you're taking on, how critical you've had to become, how selective you've had to become about the kind of projects you take on, considering that there is a dearth of work out there.
Unfortunately, the company that we're the strongest in, which is our road building, that is the one that suffered the two losses. It doesn't mean that everything is now broken up, but certainly we're spending a lot more effort now on systems, a lot more effort on report back and the time of report back, so that we can address the problem. We've beefed up the team supporting those to make sure that whatever claims, if a condition appears on a project, and that it gets addressed immediately. So a lot of things have been put in place. We've cut overhead cost by nearly 60 million going now into 2013. A project like the project that we're targeting is St. Helena, the airport. This morning in the presentation, we gave a very nice presentation to analysts and investors. and it would be one day good for you to show that on your show. And really, you know, there you can see the professionalism of the group and how well the project has been structured. So that's the kind of thing we're focusing on, design and construct, because we want to be in control of the design. A lot of our problems that's occurred now is because of arguments with the client's representative, the engineers who designed the project. And unfortunately now to rectify that takes time, because there's a process, arbitration, etc., that you have to follow. And we've felt it prudent that we're not going to take a view. We'll take everything now and try and restore during 2013.
Marius, your order book's just slightly less than it was at the last reporting period, I think, just over 10 billion. But when I hear that your main strength is road building, and you've had a couple of really bad loss-making projects in the last year, it almost says to me that you're going to be a little bit shy about going into those projects in the future. And when you talk about this, where I'm just quoting from your press release here, it says the situation has been exacerbated by the very slow rollout of announced infrastructural investment projects in South Africa. Is it the case that sometimes it wants to be rolled out, but people like Basil Read and other, or organisations like Basil Read and other companies say, well, we can't actually do the work at these margins, so therefore that exacerbates again the rollout of these projects? Is there an impasse between the two parties?
Well, first of all, Lindsay, we had a hangover from after the World Cup, where all of us tried to fill our order book, and roads projects was quite abound, and there was a lot of aggression in the tendering, and that has unfortunately gone sour for various reasons. One of the things that we've done now is sanity is starting to prevail amongst contractors, and we can see that the margins has picked up. So for us to, we've really now gone out and we've become selective. Certainly Sunroll, which is one of the largest providers of road projects in the country, they are a very large or a big client for us, and we are continually tendering for them, and we're continuing being awarded work for them. And we are good at doing those projects. So that flow of work has actually been constant, and Sunroll has indicated that their budget allocated is in excess of 10 billion rand for the financial year 2013. So that we can see is flowing, and there's a constant flow of work, and that gives us continuity. Where we're focusing on is we've entered the piping market. We bought a Valenti pipeline about 2.5 years ago, and we're busy executing the first project for TCTA, and that's close to a 2 billion rand project. Unfortunately, it's not a design and construct, but as going forward, we would like to actually focus more on design, where we are control of the design, because that's where the argument starts.
Yeah.
And when you have a fixed project and a value you can give your client, you can't keep on running to him to. So you do take care of all the risks associated with the project and with the design.
Marius, in your statement, you also mentioned that you're being forced to look outside of South Africa's border. Just what are you making of the kind of conversation that's happening at the moment at the BRICS summit currently underway in Durban? Because lots of conversation having been had about the kind of infrastructural development Africa needs to see.
Yes, obviously BRICS, I think most of us as business people, we're in support of BRICS. And especially with China and Brazil being part of that, it's for us very good news. Even the bank or the funding they're trying to set up for BRICS, I think it's good news because we know it's going to be spent on infrastructure projects. Unfortunately, at the moment, most of the projects is rollout of stock, which is like your locomotives. So we don't see that yet, but definitely it has to follow, and we just have to be patient about it. And I believe our order book is good enough that we can ride out this waiting.